Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Adrian Neilan of Deepbridge Capital to talk about their Technology Growth EIS fund. Tell me, what does this fund do for investors?
Alex, first off, thanks for having me on the show. So I guess to answer that question is sometimes it's worth reflecting on the fact that some of the biggest companies of the world are technology companies. Some of the biggest transformations that's driving how we work, how we live, how we enjoy life is driven by technology brands. So I guess it makes a logical sense for an investor to invest into a technology portfolio, such as Deepbridge's EIS Technology Fund. We are very enthused by the fact that we can offer investors the opportunity of investing into a diversified and actively managed portfolio of really exciting technologies and companies because of our selection process effectively gives our investors significant growth and capital appreciation and upside, and we're really excited by that.
And typically how many companies would I have access to when I invest?
For a typical retail investor, we typically spread across between 4 to 6 different companies in order to effectively spread their investments across a number of exciting companies and also to reduce their risk.
Tell me about Deepbridge.
Yeah, Deepbridge is in existence for 7 years. We're very humbled by the fact at the end of this tax year we'll have about £200 million of fund under management. If you consider the overall life cycle, we have a really impressive network within the overall tech ecosystem in order for us to go out and source some fantastic companies. We do a significant diligence process in making sure those companies meet a number of investment criteria for them to qualify as Deepbridge companies. Namely, we look at their IP, whether their IP is patentable or protectable. We believe that's a cornerstone of any company going forward. We look at their overall management team and understanding the management energy and whether the management have equity in there and their ability of driving through, change, because invariably as you grow a company, you'll go through different cycles which will test your resilience. We look to ensure can these companies scale into disrupt the market they're in or grow new markets. We look to see can they get into other industry verticals, and more importantly from a valuation concept perspective, can they participate on a worldwide scale and grow into different companies. Once you go through that criteria, then we make sure we have active hands-on management in terms of these companies. And we have a great team of over 200 years experience who have basically significant sectorial knowledge of some of the companies we invest into. And we effectively drive those companies towards exits. That's why we exist. That's why we want to drive value.
I know you haven't been at Deepbridge very long, so tell me about your background and what you do now.
Yeah, it's an interesting picture. In 1993, I qualified with my master's in machine learning and AI. And little did I think in 1993 that AI would be so pervasive as it is now. I would argue, based on some of my experience in the past, that AI has been used quite a bit in manufacturing. To that extent, my 10 years at Hewlett Packard as an IT director, where we used technology within the the business to effectively drive exceptional returns for HP. HP at that point in time is on record, was making about 1 billion operating profit per quarter out of its inkjet business. And that's primarily due to the technology intensive manufacturing process which we use to capture, record, store information, understand manufacturing efficiency and improving. I guess my own interest in terms of investing was also significant in my decision to join Deepbridge. I had an early stage investor in the early 20s into some technology companies. And so out of that experience, I actually got to know Ian Warwick, who's managing partner of Deepbridge Capital at the moment when he ran a NASDAQ listed company over in the US. And then in the past, prior to this, I was a commercial director, and my last company I took the business from 15 million EBITDA up to 28 million EBITDA in the space of 5 years, all by understanding a brand, unlocking value, working well with team. So I guess coming to Deepbridge and why I was really enthused about it was the fact that if you looked at the knowledge of the people around me, over 200 years operational experience combined Really impressed with that. The deal flow, and continue to be impressed by the number of companies wanting to work with Deepbridge in terms of taking on our funding, but also our strategic insights and observations. But also, more importantly, the companies we have at the moment, you could not but be impressed with the type of the problems we're trying to solve, the solutions we're bringing to the table. That's really exciting for us. And my role is, I might say Chief Operating Officer of Deepbridge and Tech Growth Investment Director, but really the purpose of what I'm about is building great companies and driving successful exits for our Deepbridge shareholders. And I aim to be very successful in that. And obviously, if that happens, then it's obviously going to be a great benefit for me.
Give me some recent examples of companies that you've invested in.
Some really good examples of that would be as follows. And I guess I describe it in terms of what problem we're trying to solve. So picture VoxSmart. That's in the space of how it kind of captures, records, transcribes, analyzes voice messages, WeChat, WhatsApp, in the financial services sector, and to do that across every conceivable handset worldwide in every different country and deliver kind of 5 nines uptime is really, really impressive. There's a group of people down in Shoreditch in the VoxSmart offices who are transforming the way financial services are being delivered and how people engage with those companies. So that's really a really exciting investment for us in the past. If I look at Connect Childcare, which is, if you consider a lot of private equity companies are now getting involved with buying nurseries, they're trying to drive significant returns out of that investment. They're looking for ways in which some of those nurseries can operate their business more efficiently. Childcare Connect is doing that, but also more importantly from a parent's perspective, they're allowing parents to engage with how their child is progressing in nurseries from a development perspective. So I guess when you see companies like that we've invested in now drawing the attention of some of the largest edge tech funds in the US, who the private comment they shared was that you've got the tail of the tiger in terms of the software solution. You know, my really shout out to the people up in Burley who are part of that team driving things forward. Greylist Trace is another exciting company we're involved in, where it uses significant AI in order to asset trace assets around the world. That's obviously of interest to a lot of law enforcement agencies and to legal firms. So significant development there in terms of that's working. Hurricane, which is one of our portfolio companies. If you consider 20% of online businesses now cross-border, UPS, for example, ship 3% of the world's GDP, so it'll give you that flavour of the amount of commerce that's online. But there's significant problems that still need to be resolved in terms of how customers deal and buy from a cross-border perspective, namely issues about understanding tax, understanding VAT. There's customs issues in terms of the context of, you know, making sure there's proper classification, where product is going, who gets product. So solving those problems is something that Hurricane is doing really well, and based on the validation of that technology by some of those bigger freight companies worldwide, really, really powerful confirmation that, you know, we're really working in the right space.
Where do you get all these deals from?
So we have a really good, as I mentioned at the outset, team of people in the UK and worldwide who are basically helping to, you know, forge alliances and relationships with universities, with government bodies in terms of, you know, where's the next exciting technology need to come from. But, you know, that's really paying dividends. But clearly what's happening now at the moment, because of our brand and our success to date, those people are now coming directly to Deepbridge, which is really, really kind of calls out some of our more value add that we're delivering on the space.
And how do you ensure you're not overpaying? Because there's a lot of hype in the technology investment area. So
yeah, and like I said, it drives the fact of where we currently operate. We typically aim for that investment of between 1 and 3 million. Typically, people will, you know, find that ring around money and raise 100,000 from friends and families. And you could argue people probably have more access to 10 million and upwards, but it's that sweet spot between that 1 and 10 million figure where we're really proficient in. So because we're really good in that space and we understand that space based on the knowledge out there, and because people are now more comfortable with our brand and aware of the value we bring, they're able to understand our logic of making sure we get the best value possible for our shareholders when we make the investment, and then they're enthused by the fact that we can help grow that business later on.
Do you find yourself having to compete for deals?
Well, at the moment we have a pipeline of companies that are currently open for significant investment going forward. We have a lot of companies coming to us. We find ourselves as an organisation having to effectively take a very high line in terms of rejecting potentially some exciting technologies, only due to the fact that we've got some really good innovative companies already with us.
And how risky is it what you're doing?
You know, if you look at risk, I kind of flip it around and say, what's your risk mitigation approach to this? So you could argue, let's have a good team in the out there sourcing great technology. Let's make sure you have an approach that's formulaic in terms of how you select some of those companies. I mentioned before about technology, their IP, talked about whether they can vertically kind of go into different markets, globally scale, founders, etc. Have a good selection process. Make sure you're actively managing those companies and work with them, really a hands-on management approach going forward. Have a monthly KPI approach to make sure that effectively you can see how companies are performing. Make sure we said at the onset, and where people make an investment, that it's spread over a number of companies. That's how, you know, if you're very structured and apply process to this, whatever, you can reduce your risk. Of course, some companies, for example, SEIS, namely you're investing them at a very, very early stage. Invariably some of those companies will fail, but effectively, if I look at it from an EIS perspective, because of how we select and if we apply those criteria, it really comes down to a thing of the relative value. Some of them will be enormously successful, some of them may need to pivot, and it's all about getting some value out of it.
So you've been around for 8 years now. Have you had any exits?
Yeah, we have 2 very successful exits. One of those exits was Sky Medical, where investors nearly got a 5 times return on their investment. iPipeline was recently brought out for just nearly a 3x return. If I go back to Sky Medical, people elected to get out, other people decided to stay in the business because they're really excited by it. We also track on a monthly basis in terms of the overall companies, in terms of are they driving more value, in terms of we track kind of has the value increased. A number of our companies, for example, VoxSmart recently had a 33% uplift in value. Compono will, based on the level of follow-on investment it's going to secure from another external lender, will have nearly over 100% increase in value. So, you know, the analogy we'd like to apply to kind of exits is it's like a football analogy, in that if you apply structure and process to how you manage those companies, you'll effectively get some good outcomes over the long term.
Adrian, to summarise, if someone wants to put money into an EIS this year, why should they invest with you? So
the number one thing why people should invest with us is because of how we actively manage this business. We you know, the work only starts when we get investments. So first off, we have great sectoral experience. We apply great people to go in there and making sure we run those companies with the investee management team. We focus on strategy, cash, people and execution, making sure we have great outcomes. We're priming towards exits in terms of how you scale in a way that's exponential. By that I mean we don't want to be adding on more cost as we scale. We try to look at our processes, add technology to it to help grow. We have a fantastic external network of people who we can team up with, be it companies, in terms of how do we make sure who would be a potential exit partner for some of those companies here. We're building up a great ecosystem of people, you know, within the whole Deepbridge portfolio where we have great knowledge. So that's really around the whole management side. But I guess in summary format, the reason why you'd invest is that our ability of selecting great companies, our ability of deploying that invested capital if somebody needs to invest within this current tax year, the fact that people can get their EIS 3 forms back in after nearly 20 weeks, straight back into them there. The fact that basically we have a €50 million pipeline of opportunities, so people, you know, can have that opportunity, that capacity is there to invest in. The fact of our active management, which I just mentioned there, and the fact that our sole focus here is building great companies and getting exits. So that has to be something that it shows us there's great alignment between Deepbridge and our investors, and making sure that we're all at one here in terms of getting overall success.
Adrian Neilan of Deepbridge Capital, thank you very much.
Thank you, Alex.
Thanks.